HODL. Save, build a sound money. Sound money. Okay, guys, it's ugly old goat here. It is August 13th, 2024. And yesterday, I'm 6'2" and got long legs, and my assistant Eddie, I don't know how tall he is, but he's a short little guy with short legs, and he's got all these wires and stuff down by my feet. And apparently I kicked out the microphone yesterday towards the end of what we were doing. And basically what I did yesterday is we outlined the bearish case for Bitcoin. And so we're going to call this the bearish case for Bitcoin Part 2. And just to sum it up very easily, the bearish case for Bitcoin is that if we restore sound money, Matthew Crowder, we listened to his take on it. I just happened to come to the same idea in different ways. And he pointed out, yeah, if the banks stopped closing bank accounts and the government started, stopped all their inflationary spending, that would have negative effects for Bitcoin, because Bitcoin really isn't that useful anymore. He's looking at mainly from that economic perspective, and I'm looking at it more from a he's using a more of a technical perspective, and I'm looking more from a psychological perspective. And I'm not alone in this. I didn't come up with the idea. I mean, it's written in Saifedean's book, The Bitcoin Standard. He outlines the bearish case for Bitcoin. He goes through all the, the technological possibilities, that it could be hacked, or 51% attack, and those things. But he ends up with sound money would be the ultimate hack of Bitcoin. If we restore sound money and a gold standard, and he specifically acknowledges the same thing, a gold standard is sound money. So if overnight, governments of the world resurrected the gold standard, the use case for Bitcoin would be substantially diminished. Now, not completely, because there's that one feature that Bitcoin has that gold does not have, and that is unconfiscatability. But as far as a useful currency for nation states, just as nation states have borders and are defined by land, they're not defined digitally. Now, maybe they're trying to create digital worlds out there, but reality is there are nations. They're actually ordained by the Lord. They have physical boundaries, at least in their own minds they do, and they all fight over them, but they are physically, and so in that sense, gold is also a physical thing. And so it works well within that nation state. Plus, the governments of the world and the boomer generation, they have gold reserves. And so it's not without, and it doesn't take a huge amount of thinking to have, an effect that compounds itself, what do they call when it goes into, when things go nuclear, basically go nuclear. So it doesn't take a lot to get that ball rolling. And there's some things going on in the market now that, fundamentally, that I think we need to look at. And one of them, of course, are these ETFs. Now, these ETFs are really a form of Bitcoin crony capitalism. And they're looking at this article now. Is that what we're looking at? Oh, okay. So we pulled up this article. The FBI breaks the silence about Bitcoin. This just came out a few hours ago. And this guy apparently does a lot of study on, who the creator was. I think the consensus is that it was Hal Finney, but we really don't know. But what I got out of this article is that the biggest holder of Bitcoin, if not already, will soon be BlackRock. And this is not good for Bitcoin. It's it's being centralized. The idea that we have these ETFs that are not redeemable into Bitcoin, you cannot take the delivery of Bitcoin. Now, I wrote about this. Do we have those articles up from yesterday? No, okay. Well, we outlined it yesterday. We actually wrote about these Backett certificates, and they no longer exist. Originally, the Chicago Mercantile Exchange was going to make a quote deliverable contract for these Backett certificates. Well, the Backett certificates are gone, and now the Bitcoin ETFs, the Bitcoin futures markets, they're cash settled. They are not. If you're trading on the CME, you cannot. Like if you're in the gold market, you can actually take delivery of the gold. What happens is you get a certificate, and it's in one of the major banks or independent depositories like Iron Mountain Depository, Citibank, Chase, Bank of America. All these have their storage facilities, and then you can literally hire an approved carrier to pick up your gold and deliver it anywhere that you want in the country. This is also true of any other raw commodity. It's true of if you're wheat or soybeans, or your precious metals, copper, gold, silver, platinum, all your grains, even your livestock. You can actually take delivery of feeder cattle at a feedlot in western Kansas. I've done it before, so it can be done, and you can make delivery. And these are real physical commodities, and this is what the futures contracts should be redeemable for. I always thought that if we had a truly redeemable futures contract, that would be extremely bullish for Bitcoin, because then the Bitcoin market could literally be squeezed, because there's no way that there's enough Bitcoin out there to make delivery, for the futures contract open interest. But they're not deliverable for Bitcoin. And so I think this is significant, and it fits along this whole idea of what we're looking at. This is, well, that's a stock market. We don't want to look there. We want to look at this market here. This is the Bitcoin market measured by the Chicago Mercantile Exchange. And the significant thing that we had here, we had this huge gap, and these gaps are not caused. The Bitcoin market trades 24/7, but the Chicago Mercantile Exchange is a 5-day market, and so they actually close for about 48 hours, or maybe a little less than that, but about 48 hours over the weekends, and so you can have these anomalies. And if you look at this, this is an entirely different chart than your 24-hour Bitcoin market, which is here. And this is the weekly. Now let's go look at the daily on this. Okay, what is this daily? Yeah. So we see here we have this 9. We really, if you look at the moving averages, these moving average short-term, your 3 and 5 day, have all turned up. But if you look at the Mercantile Exchange, we go to the daily, it's a different looking beast. Now it's going to turn up too, but it's going to take it's a little slower now. You got the one. Yeah, after today, this is a very strong day, which is impressive. So it's unclear. I mean, it's very likely that the bottom is in, but the way I would trade the market is if we rally on the weekly, if we go here, I measure a trend by the 2-week in 2-week measurements, and if we go here, if we rally much over last week's high, you sell it. Now, if we just hold in here and then start up from here, Bitcoin is going to look very strong and very positive. All I'm saying is that having these ETFs and putting Bitcoin in the legacy markets kind of defeats the purposes. Now, we've done it. I know why we've done it. people want to own Bitcoin or have that protection in their retirement accounts, which are special accounts that only the wealthy, people, the average guy on the street that doesn't have a retirement account. And why should why do you have these complex tax systems that give special benefits if by following all these complicated rules? Now, the thinking is changing, and I think one of the things that impresses me most was Trump's public announcement that no tax on tips. Well, that's profound. Finally, yeah, there should be no tax on labor, any labor. We had sound money. We had a gold standard that evolved after Abraham Lincoln created this huge inflationary bubble that financed a civil war that probably would have never happened had he not done that. And to unwind that thing, the market corrected itself, and by resurrecting organically the gold standard. And it worked so well, it was called the Gilded Age. And the period of highest growth that's ever been known in the world. And it worked so well that, of course, the powers that be decided, well, we need to nationalize this. And so it was shortly thereafter, after this wonderful gold standard emerged, that they adopted it through the Federal Reserve. And of course, at the same time, they began taxing labor through the income tax. And so we're waking up, but these are two fundamental things that need to be done away with, both the Federal Reserve and tax on labor. And I think this populist movement to have no tax on tips is wonderful. In fact, I guess Kamala Harris, I called her Pamela Harris yesterday, she actually adopted it too. She said, as though it's her original idea. And, it was a Trump campaign that came up to it. But the logical implication, if tips should not be taxed, why should any labor be taxed? And so I think this is the beginning of a fundamental move toward sound money and toward sound economic policies. No man should be taxed for his labor. And you should be, those people who refuse to work should be taxed, for not working. If there's just simply, if you have an inheritance and you're not producing, then fine, you should be taxed for your consumption. That's not an issue, but your labor should never be taxed. And I think hopefully there's a big movement towards that end. I said no labor should be taxed. I think this should be a mantra internationally, similar to the International Workers Unite, the Communist Party movement internationally, that took its, that had its beginnings during the late 19th century also. So anyway, here is the Bitcoin market, but the most significant market here that I want to look at is this gold market. Again, I am super bullish on gold. I think it's signaling that we are headed toward a hyperinflation. Now, I have a hard time believing Bitcoin's going to go down if we have a hyperinflationary scenario. We could go up substantially. It's just that it's not technically or fundamentally in this mode that we have here now. Now, gold, again, the gold market, it has a very favorable stock and flow ratio, which means the amount of new gold that comes into production, no matter what the price, is very, very small in comparison to the total supply. So it has a little bit of flexibility, but not a lot. But the price of gold goes up, there will be significant new gold production coming into the market. Bitcoin is not that way. Bitcoin has no stock to flow. It's got a fixed amount. 21 million is all that can be created, and a lot of that's been lost. A lot of it's being hoarded by huge central entities, and so you have a distribution problem. Now, the beauty of the Bitcoin is that it is unconfiscatable and can be easily moved between the nation states, whereas gold is very useful within nation states. But here is your gold market. Let's zoom out on this to the weekly, and we're going to look at this, why this is so bullish. You've got a, oops. All right, you have a, this is long term, guys. This is going back from 2011, okay? And you had this huge cup where gold didn't do anything. It was traded between, 1900 and what, 1200, or call it that, $1,900 and $1,000, just traded in this range for years. And then we went up and made some new highs, and I was very bullish here, but we never, this handle is huge. It went on rather than just being for a little time in here and going on up. We've now had this handle that has gone on for almost 4 years, and we're going up, which means this is a huge, huge move in gold. And it does signal to me the end of the dollar as we know it. Now, that does not mean that the dollar will not will cease being the international currency. But what will happen if we are to sustain that is some country will adopt a gold standard. And the United States is the one country that can do this. And can lead the way in doing it. Russia has tried, but they just don't have the history of the United States for the concept of honest and sound money. The United States does, but most people, even Bitcoiners, are inflated. They really don't want to see a resurrection of the gold standard because it'll be detrimental to their ideal of Bitcoin as being the world standard. Now, I think Bitcoin is useful, but I think it's also limited as a form of money, and especially as a form of cash. And gold is limited as cash. I've referred that to my previous articles. The only time that gold is useful as cash recently was the California gold rush. And it was because gold was plentiful and everything else was dear. A pound of coffee could not be had. A tent could not be had. Shovels could not be had. And so as people were mining all this gold, the gold did not fluctuate that much in the world, but locally in California, it was the most common worthless commodity, and everything else was dear. And the reason for that, okay, you have all this gold, but you could not get that gold from Sacramento or San Francisco to other parts of the world. You'd have to take it to Asia and sell it there, or you have to go to get it to the New York or European markets. You either had to go across physically the Panama region. There was no Panama Canal, or sail all the way around the tip of South America. And so that was the reason that gold, in fact, gold was so plentiful, they traded gold dust, but there were actually about a half a dozen private mints in California that cropped up so that they had a form of cash. If you have a plentiful commodity, that is the commodity that's going to be traded and used as cash. Now, you're still going to have, even under a gold standard, you're going to have plentiful dollars. Now, you're not going to have that much gold, but you're still going to have a lot of dollars. The difference is that dollar is going to be worth less. Instead of gold being worth $2,400 as it is now, it's going to be worth $10,000 or $20,000. And so you're going to get a lot less gold for that dollar. And that's what you're going to see. And, if the market gets high enough, what's going to happen is the government is going to peg the dollar to gold, and that will bail out the dollar and clear out the books. It's going to be, and then you have sound money. So this is the play that's going on right now in these markets. Now, if we go back to look at Bitcoin, again, I have not been bullish on this market. I was a little bit bullish up in here when we took out the 2-week high, but I've always thought that we were going to go down and take out this low in January, which is right down here, which was $38,540. And that's always because I said, this market kind of needs to go down there for it to be a healthy bull market. But Bitcoin is a unique market. Now, the interesting thing is that Ethereum did this, and Ethereum is a shit coin. And if you look, it's January low. We actually, when we spiked down the other day, we did that. We went and made new lows for the year, which is what happened in Ethereum is exactly what I was looking for in Bitcoin. That did not happen. Okay, we got a break. Boy, it was quick and it was rapid. We went down below 50,000 twice. But this is in Ethereum. We fulfilled all the objectives I would have for a downside in a very quick spike. We have not done that on Bitcoin, but it also makes a very bullish case for Bitcoin. So that's what we're looking at. Now, the other thing about sound money is if we restore sound money, the usefulness as the stock market as a inflation hedge will disappear. And what's going to become more apparent is the true value of these stocks. It's not going to be, market share and who can get the most market share. Even though we're not making any money, our stock keeps going up. The stock market value is going to be those that are creating real wealth and paying real dividends. And of course, if they're paying dividends and sound money, those are the companies that you want to be looking for. So what we're looking for is I'm not, it's just that these indexes change. Okay, this is a really strange anomaly, but think about it this way: as the markets change, these indexes, the Dow Jones, the S&P, they change the listings. If there's a group of companies that no longer are making money, they're taken out of those indexes. And so these indexes are not, they're constantly fluctuating. It's not like, an ounce of gold is an ounce of gold. A Bitcoin is a Bitcoin. Well, the S&P changes. The Dow Jones changes. So it's not a real accurate measure or unit of account except for, these in a theoretical sense and trading these ETFs and so forth. But if you look at the stock market here, the way I look at this week is definitely a sell. We took this out. We have this low. We took out these 2-week lows, and the first rally up above this week, you sell this week. Now, will it turn back down next week? Well, I don't know, but this is the way I look at the markets. And you have the same thing here. And here's supposedly the Japanese market led the way, and it's got a nice, you have to consider this a bear market rally. You have all the stuff up above the market that is going to have a hard time getting through. And again, not so for gold. So gold has this huge bull market, and this is your weekly. You're up here pressing these highs. There's really no limit. I mean, I'm not going to be surprised at all that we have a 10x move in gold during the next 18 to 24 months. Now, I can't see Bitcoin staying where it is if that happens. If we go into hyperinflation, then a lot of the predictions on Bitcoin can also be realized. But there's a fundamental difference. I don't think the ETFs and the futures, the way they're currently set up in Bitcoin, are that favorable to Bitcoin. They are cash settled. You cannot really take delivery of the commodity like you can in gold. In fact, there is a precedent There was back in, I think it was the 80s, uh, the exchanges in New York had a main potato contract, and what happened was uh, the there was a drought or some kind of catastrophe with the weather, and the main potato crop basically failed, and there was no way that there was enough potatoes from Maine to fulfill the contract. And so there was really never a shortage of potatoes. It's just that the potatoes were Idaho potatoes, which were being produced by a man by the name of Simplot, who made his beans by making by with the franchise French fry uh, contract with McDonald's, and he, of course, sold uh, his potatoes, but the contract called for Maine potatoes. And so there was a big brouhaha. The people that were long felt like the market should have gone to infinity because, well, and Simplot said, well, no, these are comparable potatoes. They're just Idaho potatoes and not Maine potatoes. And so that was what the big brouhaha was. And they finally had to settle it. And nobody was happy about it because, basically the contract had to be broken because there were no, quote, Maine potatoes to be delivered, but there were plenty of Idaho potatoes to be delivered. And so this is, and Bitcoin's unique because if you had a truly deliverable contract in Bitcoin, the Bitcoin market could be literally cornered. And because there's all somebody would have to do is make a contract for whatever the amount of Bitcoin would break the bank, and it can't be delivered. So what's the price of Bitcoin going to be? And of course that's what people are looking at. And that is the case for Bitcoin. Bitcoin is a unique asset, but it is an asset that can be used as a standard. But it's not a useful standard for most people. The standard that most people need is a sound money from their government. They need it's a weight and measure. And that's what we don't have. The dollar is not a sound measure right now. But if national currencies, if we have the intestinal fortitude and the morality to resurrect a sound standard, a sound measure, a sound unit of account, that will change the world substantially. It will change the markets. It will change the stock markets. Not that the stock markets won't be useful, that you can't make a lot of money. You will. It just will be a much different stock market. It will not depend so much on the stock market going up. You'll have a flat stock market if you buy the indexes because that's what you want. You don't want your stock going like this. You want it to be a little flat and earning, quarterly by bringing new wealth into the marketplace. We don't have that now. And that is what sound banking institutionalizes, because sound money represents the new wealth coming into the marketplace. It's non-inflationary. It's called self-liquidating commercial paper. And the function of the banks was to create new money that represents this new wealth coming into the marketplace so that these wealth producers can pay their employees, pay their suppliers. So as these people get paid, they can go into the marketplace and buy this new wealth, whatever it might be. It might be gold. It might be a car. It might be a laptop, whatever it is. And then as they purchase that, that note is required. And this is what banks did. That was the banks that regulated the money supply, and very, very few went under. If you check the history, you had thousands of these banks, and only a small fraction did not practice sound commercial banking. You know, the era of the wildcat banks was very short term and did not last long. And from that, sound commercial banking emerged. And from that, then we adopted it, we nationalized it. And of course, once you nationalize something, now it can be corrupted. All right, so there's my case for bearish Bitcoin. The whole thing is it will require a change of thinking. If a bear Bitcoin market would be healthy for maybe not BlackRock and some of the large Bitcoin holders, but be extremely beneficial for everyone else. And so a bear market in Bitcoin is not a bad thing. Okay, I'm not saying it's going to look. A lot's going to happen. I'm a big believer in Bitcoin. You dollar cost average Bitcoin. It is a reserve asset. It is it's a lousy cash, and it's not a very good store of value, but it is an excellent speculation. And that's how you need to treat it. As an excellent speculation, you don't. Now, some people put all their wealth into Bitcoin. Okay, I get it. But I don't think that was what the prudent thing to do. But you definitely want to have a portion of your wealth in Bitcoin, and you want it off chain. And that is your emergency escape money should you need it. All right, so that does it. I hope that you see the unique case for a bear market in Bitcoin. Again, it's never too late for Bitcoin. If you want to support what I'm doing here, please go to the website. And all right, you can support me by purchasing an equity trading start kit, and you will get this book. You'll get both of my books. You're going to get a Jade wallet. You're going to get my signed books, both hard copies. It's $290, and you're going to get Bitcoin. You're just going to get a big package. It's worth it. You'll also be able to see my trades on BitMEX, and we also I'm doing this boot camp. Now I'm still working on this because it's a lot harder than I thought it would be. But if you sign up for it, please read this article first. It's called Advanced Equity Trading, and it really incorporates everything that I've taught over the years, but I'm adding a new twist, and that is accountability. And the idea of being personally accountable. You need to be accountable to yourself, to others, and primarily to the Lord. And this is what I'm working on now. So please read this. And it's my personal circumstances have made me come to realize that this is something that I think is important, and to become a true equity. I'm calling it the Advanced Equity Trading Warriors. And of all the things in the market, money management is the easiest thing to understand, but is the most difficult thing to put into practice. And everybody that works for me, I say, "Wow, how's your dollar cost average doing?" Well, I haven't found anybody that's been very good at dollar cost averaging on a regular basis. Now you have to, if you do it on an automatic system, then I think that's probably the way to do it. All right, so anyway, read this, see why I'm doing it. You'll see an outline of the program, and then if you want to see if you qualify, you hit that button, and you'll go through a little questionnaire, and you can book a call with me. I'll give you a call and see if this is for you. Again, it's not cheap. I do charge $15,000 for it. You do get a lifetime membership with that, and that's my life, not yours. And so, again, that's how you can support my work, and we will see you tomorrow. Thanks for tuning in. Bye-bye.